Thank you all for joining the second quarter results conference call. Most of you would have received the results by now. However, let me briefly take you through the numbers of the quarter ended 30th of September 2018. During the quarter, our total revenue grew by 43% to 1,127 crores. EBITDA at 305 crores is 27% of sales, and the pre-R&D EBITDA is 39% of sales. The net profit after tax went up by 69% to 207 crores. During the half year, the total revenue grew by 38% to 1990 crores. EBITDA at 456 crores is 23% of sales. Pre-R&D EBITDA is 36% of sales, and net profit after tax is up by 63% to 305 crores. That's H1 numbers. EPS for the quarter is 10.61 per share, which is substantially up from 6.45 in the previous year. CapEx for the quarter is 186 crore. Total for H1 is 342 crores. And additionally, rupees 55 crores have been funded by us to our JV Qtr2 Pharmaceuticals. The H1 number for total funding to Qtr is 110 crores. The gross borrowing is at 1,072 crores, 1,072 crores, and we have about 80 crores of cash on hand. The debt equity ratio, considering the gross borrowing, is 0.41. I will request Pranav to now take up the international business.
Thank you, Mr. Bede. It was a good quarter for the international generics business. We grew across the segments. Our base business in the US, base business in Europe and Australia all had very good growth. Additionally, there was a one-off opportunity due to a shortage for Valsartan. I don't feel that the Valsartan API opportunity will continue as the supplies have resumed in the market. This is one of the primary reasons for a massive growth in the US business. As announced earlier today, our dermatology JV Aleor had its facility inspected and approved by the US FDA without any observations. Our total R&D spend for the quarter was 145 crores, which is roughly 13% of sales. We filed 8 ANDAs during the quarter. 2 of these ANDAs were filed through Aleor. We filed 3 DMFs during the quarter as well. The company has received 4 tentative approvals during the quarter. We cumulatively now have 77 ANDA approvals, which includes 13 tentative approvals. And the company launched 1 new product in the quarter. The international formulations business grew by 124% to 587 crores for the quarter, as compared to 262 quarters in the corresponding quarter last year. The US generics business grew by 128% to 419 crores for the quarter, whereas the ROW formulations business grew also by over 100%. The API business grew by 9% to 155 crores for the quarter. I will now hand over the discussion back to Mr. Baheti for his briefing on the India formulations business.
So for the quarter, India formulation business was flat at 385 crores. However, as I said in my previous call, QOQ is not a comparable number due to GST implementation last year. The better way to look at it is in the H1 number, and the India formulation business grew by 15% in H1 of 18-19 as compared to the previous year. I'm happy to say that in almost all the therapeutic segments where we are operating in, we have grown faster than the market as per IMS September 18 YTD. The ratio of sales between acute and specialty is now 31 and 69 for H1 18-19. So specialty is now 69% of the business. Now I would open the floor for Q&A. We'll be happy to respond to your queries. Thank you.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good numbers. Just trying to understand this further, this one-time supplies you mentioned due to the shortage of generic this valsartan.
Yeah.
So when you say it means that all the upsides have been captured in the current quarter, there's something remaining which would be recognized in the future quarters.
Okay, so I think this is in two parts. One is the opportunity itself and what happens, because I know there will be more questions on it later on. So as I've been saying in the past, one of our roles is to create a nimble supply chain that can react quickly to market opportunities, and we generally see quite a few of these every other year. We see something like this. So we could respond very fast to the valsartan opportunity, and we could ramp up our supplies, and we could get in the market at a high price, and that's what we sold. Now, two things have happened in the market. Subsequently, a lot more people have their supplies, so the juice and the opportunity is much lesser. Number two, the market has also shifted to the other sartans, in our opinion. That has caused some of it to go down. As regards, do I see the opportunity continuing? No. Is there anything left to be left in the bank? I'll let Mr. Bayati answer that if there's anything left in terms of...
No, I think broadly it's captured. Broadly it's captured in this quarter.
Okay, and how should we look at the US-based business going forward? Because, this is clearly a spike. Would the base business would have been stable or grown, or given the price erosion that we see, it would have come down a bit?
So the base business, barring this valsartan opportunity, has also grown. As I said in my opening statement, first, let's say about the US. The US has grown by a decent amount. While there is pricing pressure across the board, our team has managed to take some price increases as well. Almost 25% of our portfolio is where we've taken some kind of a price increase. And the base business has grown by over 20% in the quarter. And the ROW markets, as I spoke, they've grown by over 100%.
So US-based business has grown over 20%?
Yeah.
And this is a mix of volume and pricing, you are saying?
Yeah.
Okay.
So higher volume and probably little price erosion.
Okay, right. And there's a comment, on the receivable side, there's been an increase of about 300 plus crores. So should we largely attribute to this valsartan thing with the money yet to come in given the longish receivable cycles, or so is that way to determine what would have been the valsartan sales? Or
yeah, absolutely. So the bulk of the sales was done in August and September, for which money is being received now.
Okay, or my question is actually to understand in general if the receivable cycle has increased.
Not really.
Excluding this.
No.
Okay, and lastly, there's obviously this CWIP with more and more assets getting, capitalized now, so it's getting a little bulky now. So when do you think you would start, depreciating and taking it on the fixed asset side?
So, Prakash, our investor presentation gives the schedule of our expected completion. However, that would be the physical completion of the facility. Then subsequently, as you are aware, we'll be taking exhibit batches, filing, NDA approvals, and then commercial production. So, actually what would happen is probably the capitalization will take a little longer, but plus investments on those projects will really not be happening.
So I couldn't understand. So depreciation will start for these assets when?
Depreciation on these assets will start when the commercial production begins.
Commercial production, okay. So which is, say, 21 onwards?
Not for all. For Derma, like, for example, it can start much earlier. Even for other facilities, it depends on how soon we get the FDA approval and how soon we can market the products.
Oh.
But once the commercial production starts, then it can be even at 5% of the capacity utilization, we'll start charging all the expenses and the depreciation.
Okay. And the operating expenses also when the commercial production starts. So nothing
operating expenses, there are two parts, and they go as per the accounting standards. So broadly, a lot of expenses get expensed out even today. Few expenses will get expensed out once the commercial production starts.
Understood. Great. Thank you. I have more questions and join back the queue. Thank you.
Thank you.
Thank you. The next question is from Nilesh Mehta from Research Delta. Please go ahead.
Yeah, some of my questions have been answered. Just wanted to understand what is the reason for the high international growth ex of US and how sustainable is this?
Yeah, so ex of US, the growth has been high because we had some supply constraints in the past. We've been able to ramp up a lot more production in the last quarter or so. That has led to the higher growth. Will we grow at 100%? No, but is this the new base? Yes, I'd like to believe it is.
I see. Okay, interesting. And just to clarify, you mentioned that there was actually some price increase in the US business ex of valsartan. Is that right understanding?
Yeah, that is correct. While there has been price reduction across the market and in a lot of places, our team has managed to take price increase on some products as well. Of course, it could be at lower volumes, but just optimizing, so we play around with the portfolio to see where it makes sense. So there are possibilities of taking some marginal price increases as well.
But at an aggregate level, ex of valsartan, has there been an increase or decrease on a quarter-on-quarter basis? Just to understand the nature of the industry.
Decrease.
There is a decrease, okay. Would it be single digits? Any idea?
Yeah, it would be generally be in a single. It's tough to quantify, but overall, my guess is it would be in single digits.
Okay, understood. Okay, thank you very much.
Thank you. The next question is from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead.
Yeah. My question pertains to the increase in working capital cycle. You think it will normalize in the next quarter?
Yeah, most of it will get normalized. There will be some inventory build-up, which is for other new products or new launches which we'll be doing. But as far as the receivable is concerned, will get normalized by end of this quarter.
Okay. And U.S. business, base business has grown by 20% YOY?
Yeah, roughly about 20%.
Okay. And so we are going for the long term, the operating margin should be sustainable at current levels?
Meaning current level is X this one-time opportunity or inclusive of it?
Inclusive.
No, how it would be possible?
Yeah, but then, so the current levels, it is around 27%. So, should we be able to sustain around FY18 levels?
Yeah, sure.
Okay.
That's the right way to look at it.
Right. Okay. Fine. And India business has been flat.
It has been flat for the quarter because if you recall, last year first quarter was bad and this year we grew by almost 40% on that quarter. And at that time I had said that this is not a reflective growth number. So this quarter, last year Q2, there was a huge jump because of this void created by GST implementation in first quarter. So this quarter is flat as compared to the last quarter, but on an H1 basis, we have grown 15%.
Okay.
Clear? Am I clear?
Yes.
Yeah.
Okay. And how many launches are you planning for in the U.S. in FY19?
So I think at the start of the year, I said anywhere between 10 to 15 launches. And I hold that we will, by the end of the year, come to that. I think the second half is a little heavier for us in terms of launches. So we'll be around the 10 to 15 launches at least.
Okay. Fine. All the best. Thank you.
Thank you. The next question is from the line of Anmol Ganju from GM Financial. Please go ahead.
Yeah, hi. Thanks for taking my question. This 20% YOY growth on the base business that you're referring to, Pranav, is this a dollar number or more like the rupee realization number?
That's a rupee number, yeah.
That's a rupee number.
Okay, thanks. That's helpful. Second, on R&D, so basically, obviously this quarter we benefited from a one-time opportunity, but we've seen sequentially a sharp jump in the R&D by around 35-40 odd crores. So is this the new base or it normalizes during the full course of the year?
That's a right observation, but I think you can't really do a quarter-on-quarter comparison because there are some costs which gets incurred on a particular day or a particular time. But I think we'll stay around 500 odd crores for the year.
Okay, that's helpful. My third question is basically, Pranav, you said that, now with the supply shocks creating opportunities for nimble players like us, do you think that the U.S. market landscape is finally kind of, turning around the corner and you're seeing all the bloodletting which happened past couple of years now creating opportunities on the other side? Do you think we are there directionally or we still have time?
So I think one thing is the fundamental changes that have happened in the U.S. market are there to stay, and that is the new base, with the buying power that the distributors and the chains have, that is here to stay. I think it really depends on the supply side, how well companies keep up with the supplies. And, to be honest, on the generic side, we do see disruptions all the time. And if you can react quickly to it, you can capture some opportunities. While certain, of course, was a one-off, most opportunities aren't so big. But I think there is pricing erosion on some part of the portfolio. And I also mentioned that we've taken price increase in about 25% of our portfolio. So it's a mixed bag. There is price erosion, but it is in the single digits now.
Thanks. And my last question, in the international, now that the supply constraints are over, is this the base that we work with for a full year? This quarter is the new normal? Because we've seen very sharp jump there in the non-US international formulation sales.
Yeah, I think we should see similar to this. Maybe not as high, but yeah, it will be roundabout. This will be the base.
And if I can squeeze in one last question, I understand that this quarter, obviously has the challenge of a very high base to overcome on the domestic side. But from a full year standpoint, post this quarter, has anything changed with respect to the growth outlook for the domestic piece of the business?
Not really. I think we should be doing about between 14 and 16% of growth rate if there is no other external disruption in the market.
Thank you. Thanks for taking my questions.
Thanks.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. The next question is from Dinesh Pathak from Goldman Sachs Asset Management. Please go ahead.
Yeah, thank you, sir. Sir, is there an explanation that you have given for other expenses being higher this quarter and the run rate to be expected for 2H?
So, one reason obviously the higher R&D cost, as the R&D cost gets clubbed into other expenses on the top. I think that's probably is routine because Q2, usually the domestic promo expenses are high, marketing and promo expenses in Q2 is high. So that is in line. I mean, that would look higher in comparison to previous year because previous year we had curtailed some of these expenses. Other than that, most of it is in line.
So X of R&D also, it is higher sequentially, not comparing with last year, but comparing with the June quarter this year by about 55 odd crores. So Q2 obviously is higher. I see the past year trends also higher because of, as you mentioned, domestic promotional. But it comes down in December and the March quarter. So is that also a fair understanding? Because in the past years also I've seen that, December quarter it will come down and then March quarter again it comes down. Because I'm assuming this, the new facilities that you've talked about, in the H2 FY18 as per the presentation, so they will not contribute anything, right? Because as you're saying that till the time we do commercial production, you will not do the above EBITDA OPEX expensing, or you will start doing OPEX expensing as you take exhibit batches? So
as I said, no. It doesn't depend on the taking of the exhibit batches, except that the direct costs related to exhibit batches are charged off. So the employee cost and the utility cost, etc., is charged off, because that's part of my R&D. That's charged off in expense. That is being currently done also. So maybe base will go up a bit, but bulk of the expenses will get charged off only when the commercial production starts.
Bulk of the expenses will get charged off. So there are two parts. One is the depreciation part that I have understood properly.
My direct R&D expense, my direct exhibit batch cost will get charged off, because that is part of.
Anyways, right now you're getting charged off, right? As you said.
That's right. That's precisely. No. So today only 2 plants are taking exhibit batches. Towards end of H2, all my plants will probably get completed and will start taking exhibit batches. So to that extent, R&D expense will go up a bit.
Okay.
This quarter also, I think this quarter we also had an MTM loss on some of the hedging which we have done, but which has been more than compensated by higher revenues coming in. But that MTM loss comes into the other expenditure.
Can you quantify that MTM hedge loss?
It's not significant. It's not significant in an overall context, but when you are doing a comparison on a sequential quarter-based basis, all this contributes.
Okay. So can you give me a number for FY19 where the operating costs for the new plants, how much of the operating costs for the new plants in FY19 would have been capitalized?
No, nothing has been capitalized. Everything is being carried forward today in work in progress. We will do the capitalization once the plants are completed.
Yes. So that is what I meant. When I meant was that not, so let me word it differently. I'm saying in FY19, can you give me an estimate of the operating costs, which are costs above EBITDA, which will not be charged to P&L and would be, put on the balance sheet?
Would be capitalized.
Yes.
And which would also include the borrowing cost. Because as per the accounting standard, even the borrowing cost, interest cost on borrowed funds which are used for setting up new facilities are to be capitalized till the date of their commencement of operations.
Yeah.
So I won't have the number right now, but I can share with you separately.
Let me connect offline, sir. Thank you.
Sure.
Thank you. Next, we have a follow-up question from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the follow-up. Just trying to understand the, there's a molecule, the Ryzen Pharma, RP6530. I think it was also presented at ASCO. What are the readouts? When can we see some, monetization of the same?
If you see actually Ryzen, all their public disclosure, they're on the site. It's still some time off the 6530s. They still have to do a lot of studies. I would assume it'll take at least another 2-3 years for it to get to a stage of completion of the clinical studies.
Okay. And regarding the, we have a target of doing about 100 filings. So we did about 8. So, given that a lot of companies talking about, rationalizing R&D, cutting off ANDAs and all. So, is there a rethink about it, maybe in terms of numbers, maybe in terms of going to different therapies or reevaluating? So what is the thought there?
Yeah, so when we said hundreds, we said approximately we'd look at adding about 100 odd products in the next 3-4 years, right? That would put an average of anywhere between 20 to 30 per year. That's what our thought process, that was a broad target. Do we internally evaluate? Yes, our grid keeps getting changed on a regular basis, depending on the risk profile of a product and what we foresee as a market opportunity. So as you're right, so we're seeing what's happening in the market, we keep evaluating those and we keep fine-tuning that. Yes, so far in the year, it's a little lower than what we had thought, but I think we should catch up. If you see last year, what we filed, 20 or 26 or ANDAs, I think we should be at a similar level this year as well.
Okay.
First half we have filed 11, not 8. 8 is for the quarter.
Yeah, I said for the quarter, yeah. So we're looking at 20 to 30 for the year.
25 plus in the year.
Understand. Great. And to think in terms of the investments we made, both in terms of R&D and CAPEX, so the monetization for derma, you said, would start from fiscal 20 onwards, and the injectables will start from fiscal 21 onward. Is that right way to think?
Well, derma, there's a lot more visibility now that the FDA has already approved the facility. In terms of injectables, yes, about FY21, FY22 is when we expect, because we'll start doing the batches in the second half of the year. Then by the time you do the filing, you got to get approval. So it would be safe to say, end of FY21, maybe early FY22.
And to start with, we would mostly get the general already 3-4 player market, I would assume so? Or there are a few good limited competition ones as well?
It's tough to say right now. I think from the R&D perspective, we're working on a bunch of products. It's tough to say, and I really wouldn't like to give a guidance on how the product is, because it's still a couple of years off, and we've seen the market change a lot. So it's tough for me to comment on that right now.
Okay, great. Thank you, and all the best.
Yeah, thanks.
Thank you. Before we take the next question, a reminder once again to our participants that you may press star and 1 to join the question queue. The next question is from Nilesh Mehta from Research Delta. Please go ahead.
Yeah, thanks for taking my follow-up. Just to understand about has there been any impact of the increased API cost at an aggregate level in this quarter? And what was it? And what do you think is the outlook on that?
So we have seen an increase in API prices. API also some of the intermediate prices because of, I understand some supply disruptions or constraints in China. So yeah, so more than the cost, I think even the supply disruption apprehensions are there. So we have done some stocking so that we are well prepared. There has been some price increase also.
If you can, some ballpark impact on the numbers or likely to have in the coming quarters, that would be helpful.
Actually, how would you look at it? Because we have two different business verticals. Both the business verticals have some impacts. It is not uniform across. It is different from product-wise. So while we keep doing our analysis, it's very difficult to quantify a specific number or a specific percentage.
Okay, but this quarter, what was it also is not easily identifiable?
Meaning? Which number? What exactly you wish to have a single number?
Yeah, I'm trying to understand the impact on, let's say, the cost of goods sold this quarter due to the increase in API and or intermediate cost. With some understanding.
As a percentage, it won't be very high. On our base, as a percentage, it won't be very high.
It won't be very high. Okay, fine. Okay. Okay. And on the U.S. business now, I mean, we are, I mean, just to remind myself, so we are anticipating, we are kind of envisaging 2-3 opportunities. One is the injectable business, one is the dermatology business, and the other is the oncology business. So if you can just remind ourselves as to, you know, what, which is the opportunity that is going to pan out in terms of timeline. So first, I guess, would be injectable or oncology, and then, so, you know, that chronology, if you can just give us, and some broad timeline, that will be helpful.
So the first one will be the derm opportunity, because as you know, the derm facility just passed the FDA inspection. The onco and the injectables facilities will go on stream in the second half of the year. Then there will be the filings, and then there will be the FDA, FDA investigation and the approval, inspection and the approval. So the first will be the derm, followed by the general injectables, then I assume the onco injectables.
I see, okay. And derm, you mean we would be able to see any launches this year or next year, or, you know, again, some?
We've launched one product, a cyclic ointment, already in this last quarter. That is not from our own facility, obviously. We may see another one at the end of the year, otherwise the rest will be all next year.
Okay, understood.
Again, it would depend on the approval. The facility is inspected when we receive the approval, ANDA approval. It will be dependent on that.
Right, yeah. That obviously will depend on approval. But yeah, some ballpark understanding. Thank you. This was helpful. Thank you. I'm done with my question.
Yeah, thanks.
Thank you. The next question is from Charulata Gaidani from Dalal & Broacha. Please go ahead.
Yeah, my question pertains to the U.S. business. On a constant currency basis, what type of growth would you expect for FY19?
We haven't given a guidance on the growth, you know.
Okay. But there is a huge amount of volatility. Like Q1, it was around $52 million, and Q2, it has come down to around 33, 34. So, can you, if you could...
Which number you are referring to?
Yeah, I'm not sure what you...
In the sense, if I take a 20% growth in rupee terms on the current exchange rate side.
Okay, so whatever number we talked of was on rupee basis.
Yes.
So US-based business is about $35 million on a quarterly basis. What's the number you are talking of?
Yes.
So what is the question then?
In Q1, it was around 52. And it has come down in Q2. There is a huge volatility. So what is the reason for that?
Okay, let me come back to you. Let me just look at, I think there is some disconnect within the number you are speaking and my internal numbers. Let me come back to you.
Okay, fine.
Sure. Yeah, you can pass on to the next question, please.
Sure. The next question is from Sohini Das from Business Standard. Please go ahead.
Hi, am I audible?
Yeah.
So I was just wondering, I joined in a bit late, sorry, so I don't make it a repeat question. One is, you mentioned that one of the products, in short supply, there was an opportunity, which is why the profits and the high. So could you tell us, if this opportunity is being taken away, what would have been the normal growth in the international business or the US business?
So, as I said, few things. If you see the international business, there's various territories. The rest of the world territory also grew by 100% odd. That was mainly due to some supply shortages that we had in the past and we could supply. And ex of Valsartan in rupee terms, the US grew by over 20%.
Okay. X of Valsartan, it grew by 20 odd %, the US business, right?
The US business. More than 20%, over 20%.
Okay. And 20 to 25 launches per year is your target for the US?
No. I said about 10 to 15 launches in the US market.
Okay. Every year going forward now, right?
This year.
Okay. Thank you.
Thanks.
Thank you. The next question is from Damayanti Keria from HSBC. Please go ahead.
Thanks for the opportunity. Sir, to expedite some of the U.S. opportunities, are we going for some third-party collaboration or outsourcing of some of the key pipeline products?
I don't understand. Which products are you referring to?
No, say our target is injectables, which we are looking for long-term and all. So right now you are mentioning that we should be looking at those opportunities FY21 and beyond. So just to understand, are you planning or are you already in collaboration with some third parties or some outsourcing partners to expedite some opportunities? In that case, we can see those opportunities coming much earlier than FY20.
No, I think for injectables, what we're doing is everything is coming from our facility. So you will see that as soon as as I said, the batches will start in the second half of this year, and we'll wait for FDA approval after that. I don't think it's going to be much faster going anywhere else.
Okay. Coming back to India, can you specify what is the field force strength right now for Alembic?
So it's 3,800 reps in the field.
3,800 reps, okay. And any comment on the productivity, what is the current standing and what are we targeting?
It has gone up to 3 lakhs now.
3 lakhs as of current quarter from what level? Previously it was?
Yeah, it was sub 2.7. Now it has gone up to around 3 lakhs.
Okay. Any near-term target we have here? Near to medium-term target?
So basically all my growth has to come out of productivity increase, and immediately we don't foresee any expansion in field force.
Okay. That's helpful, sir. Thank you.
Thank you. The next question is from Kunal Randeria from Antique Stock Broking. Please go ahead.
Good afternoon. Our specialty business in India has picked up after a fairly lackluster FY18. So you had mentioned this in the last quarter also that this is sustainable. So what are the strategic changes that you have made gives you the confidence of this, reverting back to a previous level?
No, I don't think there is a lot of strategic change. I think it is an operational execution where we are trying to improve virtually every day. So it's an execution which is the key, and that's what we are working for.
Right. So in the near term or in the medium term, we can expect it to be beating the market.
Yeah. I mean, when I say market, I always mean RPM, our own, the molecules in which we are present. Yeah. Sure.
And my second question is for Pranav. Can you shed some light on ROW markets? More specifically, how much of the growth is due to some supply backlog? How much is probably some product-specific growth? And how much of it is actually sustainable?
So I believe the absolute amount and what we do on an annual basis is sustainable because that will be the new business. But a bulk of it has been due to supply backlog that was there. We had some issues last year where we had some agreements which were, we had a dispute and we were waiting on clarity on something. So I think it's all supply backlog that was there. But I think this should be the new base going forward.
Right. Okay. Thanks a lot.
There's no one particular product per se, just a basket of products.
Okay. Thank you.
Thank you. The next question is from Chirag Dagli from HDFC Asset Management. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, on Valsartan, have prices gone back to the pre-hike levels?
So a few things have happened. One is there's a lot of supplies in the market. So prices have corrected quite a bit because a lot of players have come in with supplies, number one. And number two, as I mentioned, there has been a shift to other sartans as well.
But the price is still higher than where it was before the price hike started.
I'm not sure. It's quite static, but I think it's gone back pretty much back to where it was. Maybe a little higher, but not much.
Okay, fair point, sir. And sir, on the ROW market opportunity for the non-oral solids pieces, is there something substantial there in the oncology or
non-oral solid side on the ROW markets? We're not doing anything as yet. We're waiting for the approvals of the facilities. First, you'll see the business. The filings, as I've mentioned in the past, is predominantly U.S. the first market that we'll look at. After that, the ROW markets is what we'll see if there's what makes sense for us.
So what remains the growth drivers beyond this, once this supply constraint is in the base, what will be the growth driver for this business beyond the 100 million that, you're currently clocking on an annualized basis?
So it's a little, for the ROW, it's a little less than 100 million, but what will happen is, one, this will be the new base, and then as you get new launches, about 10, 15 new launches that we do in each of the markets. And it really depends how successful we are, how good our supply chain is, and that's how we'll grow in the future.
But within the oral space, there is enough opportunity still?
It is all oral.
Okay. And sir, what is the capex for FY19 and 20?
So, FY19, I think the number is already given. I think it would be about, total would be about 400 odd crores. No, sorry, 600 odd crores. FY20, there would not be significant capex, except the spillover expense of any of these projects, if there are any, and maintenance capex.
Sir, when you sort of look at the CWIP that was there as on March, it's about 910 crores in hard assets, and then another 600 that you'd probably spend this year. How would you split this 1,500 roughly in the 3-4 buckets that you have? Oncology, dermatology, just ballpark split would be helpful.
So typically, a formulation plant these days, formulation plant of recent size these days costs about 250 odd crores. So that's the kind of number we have spent on almost each of these plants. Derma, oncology, and injectables.
Okay. Thank you so much.
Thank you. The next question is from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Hi, thanks. Pranav, on the U.S., once as the rates of filing for us is picking up, and you've guided to a 10 to 15 new launches for this year. When do you see a pickup in these number of new launches? The quantum of new launches every year. At what time period do you see that happening? FY20, 21, when do you see that breakthrough sort of pickup coming through?
Yeah, so if you see the last 2 years, what we filed 20 and 26 or so, it's about 46 ANDAs have got filed over the last 2 years, right? If you assume this year itself, you'll file another 25 plus. So looking at, and with the FDA approval timelines, which have gone down to about a year and a half or so now, barring, of course, the para 4s, you take those out of the picture. So you should look at all those coming in. So I would say at least 10 to 15 launches every year for this year, definitely. Next year, probably more. Let's see how the approvals go.
And secondly, on the business as it is today, based upon broadly the numbers that you indicated, we roughly seem to have currently a base business about $150 million. In what would be the product concentration in this business? Top 3 products would be what, 1/3 of this business, or how would you?
So that's the way I see it, and I think I've said in the past that for most companies, if you see, there'll be about top 20% of your portfolio, which will be a chunk of your US sales. I think the same with us. I think top 20% would yield about 80. I'm just saying as a rough principle. I don't have the exact number with me, but I think we'll be in the same basket as the other companies.
Okay, thanks. And last, Mr. Baheti, on the SG&A, so if we take the first half on other expenses SG&A, is it right to sort of use that as a base on a half-yearly basis?
Yeah, plus minus 5%.
Sorry, sir?
I'm saying plus minus 5%, that should be the base.
And sir, incrementally, what kind of incremental growth can really come on it when all the newer plants start to get commercialized? I mean, barring the inflation-related increases which are there?
No, I didn't get your question. What exactly are you asking?
So incrementally, when the newer plants get commercialized, when you start to capitalize them on the base that is there on H1, incrementally, are we looking at a meaningful growth on this number, say over the next 2 years, once all the new plants are also commercialized?
So once the plants are commercialized, then I think on the other expenditure side, the growth will be okay. Okay, let me put it this way. All the expenses, that is manufacturing, what you call employees and other expenses, all together should see a growth of almost 200 crore rupees a year.
Incrementally, sir, from here on?
Yeah.
But so then what explains this 50% growth that we've done on other expenses in this half year if those costs are still not in our cost yet?
So I said that the largest contributor is the expense increase in R&D. There's a bit of MTM loss. That's R&D.
So the MTM loss and the R&D expenses?
That's the largest contributor out of this total increase.
Okay, sir. But I say incrementally another 200 odd crores that we need to build in across different line items when the plants to account for the incremental commercialization of the plants.
Yeah, absolutely.
Okay, sir. Okay, thank you.
Thank you. Before we take the next question, we'd like to remind participants once again that you may press star and 1 to join the question queue. Next question is from Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, thank you. Just one clarity. You guys mentioned that US sales have increased 20% year on year. But how about sequentially? Sequentially, this will be almost flattish, the base business, or up in low single digit?
Sequentially, I don't have the figure with me, but I think it'll be flattish, yeah.
So the price increase, Pranav, that you talked about, you would have taken it last year. That's what the price increase that you mentioned.
No, so what would happen is, while I said that there is still erosion, a single-digit erosion, what happens is when you take a price increase, it helps offset some of that. So that's what benefits us a little bit in some of the products.
And that price increase you would have taken this quarter then?
We've taken some at the beginning of this quarter, some at the end. It takes a while for these to get through,
Okay. Thank you.
Thank you. Next question is from Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, just one clarification, the question that I asked and you answered. So you mentioned that on the base business, US has still grown 20% YOY and there has been a price decline overall. So the volumes in effect would be higher than 20%. And so I'm trying to understand, so is the production gone? So we have tied up with many suppliers or is it like a couple of products which we have increased production? How to think about over 20% volumes? And would that be sustainable?
So it's a complex question. Basically, the U.S. business has grown by about 20% in rupee terms. As I mentioned, some products there has been a price increase, some there's been an erosion. And I think that's a combination. It's very tough to say because in one quarter how much, there's no one or two activities I can say that has led to this increase. It's across the board. We've picked up some market share, we've lost some market share, we've done some price increase. It's a combination.
No, but to respond to your question, all the supplies have gone from our one existing plant. So we have no outsourced product as far as the international formulation is concerned. And we have no other facility. So yes, there has been a volume increase in this facility.
Okay. And you think these are sustainable volume increases? There's no one-off kind of volume increase, what I tried to say.
That's just, yeah, that's right.
Okay, thank you.
Thank you. The next question is from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead.
Yeah, my question pertains to Aurit. Have you started integrating Aurit products into Alembic?
Yeah, we have started integrating audit product, and we've launched one of them, and we'll launch some of the other ones as well.
Okay. So, how much will it start contributing in FY19?
FY19, we don't know. As of now, the contribution is insignificant to the overall scheme. But as we get more products back into our own label, also we get some approvals which are awaited for the ANDA which has been filed by audit, I think we'll have more visibility. Okay. This one product we launched is a relaunch under our label.
Okay, fine. Thanks.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to Mr. R.K. Baheti for closing comments.
So, thank you very much for all the participants to have been there and listening to us. And we'll be very happy to respond to your questions offline if there are any. And look forward to see all of you, connect with all of you again next quarter. Thank you. And before I disconnect, I wish all the participants and their organizations a very happy Diwali. Thank you very much.
Thank you very much.